Well, that's interesting. That's going live. That's going live, and that's going live. Holy chally! Ooh, wait a second. I gotta do this. There we go. Ooh, good evening. And good evening over there. What's that? Big D? Big D's in the house. William Johnson, Sunday, AG, Mahmoud, Eduardo, ¿qué pasa? Okay, come on. Mirror this, mirror that. And here we go. Andrew Nichols, Mr. Ticker, good evening. New Jersey's in the house. Milton, good evening, Milton. Baller, what's happening? All right, so we are live on 1, 2, 3, 4, 5, 6, 7, 8. Holy cow, 8 tonight. What are we doing? Oh, check that out. Yeah, that's my aquarium. Anyway, let's get ready to go. Where are we? Let's get out of that. Let's go there, and I think we're ready to roll. All right. That being said, Steve, what's happening? John, how you doing? Nana Wayne Beats. Okay, cool. Gail, good evening, Miss Gail. What else we got there? Randy, Waggy, Cool Beans. A lot of people happening. All right, I'm going to try to answer each and every individual question as we progress forward. Jeff, how's it going over there? So please do me a favor, ask the question once and only once. Hey, James, hold on. Do you plan to roll Mara 12s another week in the same position, ironically? Jay, we're going to take a look at that in a little bit. Mink, good evening. Tino, good evening. Wolf wants to take a look at Caterpillar. All right. Okay, Nate. Hey, man, do you hold your stocks or trade for dividend growth? Ooh, Nate, that's an awesome question. Nate, normally I buy the stocks just before the EX date, do a covered call on them to get a higher rate of return on my money. You know, don't get me wrong, dividend capture is a great strategy. However, I first started out dividend capture. Don't get me wrong, it was great, simple, easy, buy the stocks, sell it. Timing was right. It was awesome. But once I learned another strategy, a covered call incorporated into that same scenario, well, my returns just started exploding. The predictability and the consistency of the returns was consistent, but they were growing much faster, incorporating stock options in with that same trading strategy. But we'll look at that a little bit later on tonight, if you like. All right, so who else do we got here tonight? Juan, good evening. Demon, do you buy the stocks before Christmas or after New Year's? No. Damon, you're new here. I'm very specific as when I buy my stock. I buy them just before the EX date. Grab that little increase, little pump up just before the dividends paid. Jump on out with a nice small little profit, and I just keep doing that every single week. Kelly Thomas, don't care. Don't know, don't care. Woman after my own heart. You are a little guy. Absolutely, I'm a little guy. I'm only 5'11". Sorry, not 6 foot. But you know what? I'm past that age, so I don't really care about it. Dakota Kid. My idea of investing is way different. I focus on value. Cool beans, Dakota. I focus on cash flow, consistency. Wait a minute. Safety, predictability. Okay, same thing. I'm still looking for cash flow, just a little bit differently. There's so many different trading strategies out there. Okay, Tanner, I don't like yield max. If you actually take a look at the dividends and see how consistently they don't really increase them every single year. Now I'm looking for 2 decades of increased dividends. Yield max doesn't have it. Okay. Kelly, let's not get into that right now. Okay, how do you know ICT concepts for trading? Have you tried them? Okay, you're going to give me a little bit more specific. What do you mean by ICT concepts? Because, you know, in my lifetime, I've done so many different jobs in so many different fields. Everybody has abbreviations for something different. Okay, so ICT, briefly explain what it means so we're on the same wavelength. Dakota, I like to show off my portfolio online, so I don't care much about gains. It's just different. Dakota, absolutely fine. But Dakota, understand where I'm coming from and what I'm trying to share. Okay, I'm 61, I'm retired. The money I have made throughout my working life now has to last me the rest of my life, give me enough to live on and still grow at the same time. Now, however much money you think I have, I probably don't. But it does allow me a very comfortable lifestyle and a consistent 1% every single week. That's my goal. That's what I'm looking for. Now, yes, I probably could make money doing other things, but Tony, what's happening? But that's not my focus at this moment, at this point in my life. This point in my life, I want capital preservation, growth, and income, kind of all at once. Cash flow and growth. Okay, specifically 1% every single week. That's over 50% a year, and I'm perfectly okay with that. Okay, so let's keep on going. Inner circle trading. Well, I'm glad you explained that to me because I have no idea what inner circle trading means. Okay? I've been doing the same strategy for the past 15 to 20 years. It works fine for me. I have no desire to look at anything else, but I appreciate your offer. Is a trader that has 30 years doing trading. Okay? His name is Michael Huddleston. Okay. Dakota Kid, I'm a flex trader. I trade to flex on haters primarily. Well, cool beans. I don't know what you're doing here. All right. Scott Cook, how's it going this evening? Nice to see you in the house. Way to go, Scott. Hope you had a great weekend. I did. Normally, I only have a 2-day weekend, but this weekend was a 3-day weekend. Awesome. Just kicked back, did a lot of nothing. My grandson came, hung out. Thursday night, my grandson was even online with me. He came up with a really good punchline, and I'm going to make it into a T-shirt. Something about stop all this craziness. A good thing I wrote it down. Nate, how soon after you receive a dividend will you sell the stock to enter a new exit? No, Nate, you misinterpret what I'm saying. I don't want to collect the dividend. I don't, because after the dividend is paid, the stock usually goes down in value. Okay, I want to jump into the stock just before the dividend, get that little bump up, and then jump on out. I have a really cool strategy. If you want to hang out and watch, you'll see how it works. So if you think about it, the stock option premium, specifically on the weekly stock options, is usually a lot higher than the dividend. So I used to focus on dividends alone, but now since I changed just a little bit of focus, going down the same road, but I'm not looking at that street side anymore. I'm looking at something different, which allows me to multiply my weekly return. So I'm not doing the dividend capturing like I used to, a little bit different. What's the plan for Monday? Well, Monday, I could do my morning trading class at 9 a.m. What are my thoughts on mutual funds? Kevin, I have not yet seen a mutual fund that pays over 30% per year, so I don't like mutual funds. Okay, Kevin, my main focus is a simple, safe, predictable, consistent 1% per week. That's over 50% per year, brother. 50% per year. That's my focus. Okay, I don't expect you to believe me or trust me or anything like that, but just watch for a few minutes. If it makes sense, great. Watch a little bit more. If it makes more sense, fine. Watch a little bit more. Then ask yourself a question. Does it sound like it would work? Does it sound like something you could do? Because you don't know this, Kevin, but the trading strategy that I'm showing tonight, well, I'm not charging anything for it. I'm going to tell you everything you need to know, and it was created for a 9-year-old. So you should be able to get no problem whatsoever. Okay? Uh-oh. Cowboy wants to look at Pepe. Melodic Angie, how you doing? Steve-O, I have done a few trades like this. Nothing consistent yet. Sorry, Steve. My consistency is well into the years. We're getting close to decades now. Wolf wants to look at ConocoPhillips. What do you recommend if I can't trade options due to capital yet? Nate, what I would recommend is education. Keep searching, keep looking. There's always possibilities. They have stocks that go all the way down to $2 a share that you can trade off of. Uh-oh. Angie, RBLX. Uh-oh. Okay, I'm a little slow here, so what are we looking at first? Wolf wanted to take a look at Caterpillar. So Caterpillar's going to be the first one on the list. Big Sexy. What a cool name. Thoughts on AbbVie this week before earnings? Ooh, let me write that down. AbbVie. ABBV. What else we have? Caterpillar. There was a few others. Caterpillar. Pepe. I've never even heard of Pepe. Pepe. And ConocoPhillips. I heard that one. I like ConocoPhillips. Uh-oh. We doing covered calls tonight? Absolutely. And how you doing today, stocks and options? Nice to see you again. RBLX. RBLX. Some strange reason it does not ring in a bell. HESM. Never even heard of that. HESM. Mikey, James, when you look for a covered call, you look for 2 days to the upside. Do you look for 2 days to the downside for puts? Good question. I don't do puts here. Here I teach one trading strategy and only one. Sorry, Mikey. I got to draw the line somewhere. I can't teach everything I know. It would make a sense to more than half the people in the audience, and it's just go right over your head. Information over. I'm not saying anything about anyone in particular. I'm just saying I'm giving away of my time and a strategy that gets 1% a week, which is over 50% per year. I think that's something nice just to give away for free, for fun. You know, that's all. All right. So some people do puts, and you could line it up that way to do puts. I just don't do them. And when I do them, I don't share them here. Okay. Gold is going up. Alrighty, if you say so. Big Sexy, Amazon. Sorry, Big Sexy. Amazon doesn't have dividends, so I don't trade mostly stocks that don't have dividends. Curious to my options on MSTY. I know it doesn't meet the criteria, but still curious. Okay, TikToker, you're curious about MSTY. Okay, I tell you what, I'm here until 11:30. So do me a favor. Go find a financial website. Dive in deep into the numbers, the fundamentals of MSTY. Come back and let me know how many years in a row have they increased their profitability, which means how often has their dividend increased consecutively. That means going up and not coming back down every year. Higher, 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 higher. So let me know how many years that is, and then we'll touch base on MSTY a little bit later on. We'll dive deeper into it and give you my opinion after you find that information for me. Don't. GHI. What is GHI? Quantum, how are you today? Funky Cold. UB Fugly. Cool name. UB Fugly. All right. Hey, it works. Works for her or him or whoever the hell that is. Okay. Yeah, Big Sexy. I don't do Amazon. We're going to go over that. Steve-O wants to take a look at Ford. We haven't even looked at one yet. All right. How to purchase and what to look for when purchasing. Nancy Love, how are you tonight? Nancy Love. How to purchase? Well, purchasing is simple. You just have to figure out how and where you want to do your purchasing. What I mean by that is you got to pick a trading platform. You know, do you want to trade at, well, Ameritrade's no longer around, but you can trade at international brokers, Robinhood, Acorn, Webull, Interactive Broker, I already said that one, E-Trade, Fidelity, Charles Schwab. There's a lot of places you can trade. You just got to find a platform that you're comfortable with. And then once you want to start purchasing, well, you've got to have a theory first, or some kind of idea, or some kind of outcome. I mean, you're not just going to take your money, well, wait, let's go back here. You're not just going to take your money and throw it into anything. You have to have a plan. What are you looking for? Okay, see, just putting money aside into the stock market with no plan, it doesn't really make very much sense. What are you trying to get out of this? Are you just trying to learn how to take care of your own money? Are you learning for a possible increase in valuation over the years, aka stock appreciation? Or are you looking for cash flow? Are you looking for something that pays on a weekly or monthly or an annual basis? Okay, there's a lot of things you got to answer first before you figure out how to purchase. What is the reasoning for the purchasing it in the first place? What is the reasoning you want to invest? Because here, my investments is simple, safe, predictable, consistent, 1% a week. That's my goal. Okay, and I only use stocks that will help me reach that goal. And I only use a trading strategy specifically designed for me to hit that goal. That's what my main focus is. You may have something totally different. Now, this might be a good place to start off, a stepping stone, because it was created for my 9-year-old daughter. You know what? Starting off the week, let's check in with the little princess. Wow. That almost straightens everything out. All right. So, Nancy Love, you're new here, so let's introduce you to the princess. La, 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 la. Video. Here's the princess.
Hi, I'm Jason, and I run my internet which my dad doesn't call it that, but I do. Being part of that, you're doing weekly stocks and option trading.
That's Stacy. Years ago. What's that mean? Needless to say, cracks me up every time I see it. I'm only playing that specific to show you that I've been doing this for quite a while. Okay, that was my daughter. When she was 9, she jumped on my lap and said, "Daddy, can you teach me? What are you doing?" What are you doing, Daddy? Can you teach me? So to teach a 9-year-old how to trade in the stock market when most adults don't understand it, well, it was challenging. So the criteria was it had to be safe, it had to be simple, no way for her to lose, the consistency of profitability had to be in there, and the numbers had to work. So there's 5 rules. Rule number 1, never buy something you don't understand. If you don't understand it, if you're not willing to hold on to it till the day you die, don't buy it. It's an investment. It's a place for you to put your hard-earned money. Now, we're going to show you something a little bit later as we progress. We're going to be here till 11:30. Number 1, never buy something you don't understand. Number 2, never sell at a loss. It just defeats the purpose. We're trying to create cash flow, specifically weekly cash flow. Number 3, oh my goodness, make sure the company's consistently profitable. Well, it doesn't make sense to put your money into some place that's not profitable, but you are going to be amazed at some of the stuff people put their money into. Now, I'm going to sit here. I got 7 cameras going. It means I'm streaming to 7 different places, which I'm going to take a look at stocks that other people are putting their money into or thinking about putting their money into. And we're going to look at a few interesting facts about them and maybe some predictions, whatever. But you'll be surprised. People put money into things that aren't consistently profitable, and that boggles my mind. 3, make sure the company's consistently profitable. Okay, me, 2 decades. That's what I like. The stock market has been around for 400 years. I don't think 2 decades of profitability is too much to ask. Okay, we check every single week. Last week we checked, it was 10,036 different companies. So out of those 10,036 different companies, only about 300 fit the criteria that I'm looking for. And we're going to talk about that in a couple of seconds. But rule number 4, weekly options only. The name of the show here is Dividend Stock Talk. Okay, dividend investing for weekly cash flow. That's what I'm looking for. Companies that are consistently profitable and have weekly options. Like I said, there's about 300 that fit perfectly. And number 5, make sure the numbers work. What I mean by that specifically, if I'm going to put my money on the line, okay, now you may think I'm trying to sell you something. I'm not. I'm just creating a documentary series for my children and my grandchildren, and you just so happen to be reaping the benefits. Because there's a lot of people following along that are making money, and they're happy about it. So, all that being said, great. So, it is a document series for my children and my grandchildren. Okay, some of you may have met my grandson last Thursday night when he actually joined me. I thought it was fun. We had a blast. Anyway, let's proceed. So, with over 10,000 different stocks to choose from, I have two criteria. Two. In only two. Okay? Now, you might want to write it down, but it is simple, and it's so simple you'll think to yourself, I don't really need to write that down. But you probably should write it down because there's something that goes on in your head once you write down something on a piece of paper. Anyway, you ready? Two things. The only two things I'm looking for. One is consistency of profitability. That's it. If you got 20 years of consistent profitability, great, you're on my radar. Two, cross-reference that with weekly options only. That's it. Just two criteria. Weekly options and consistent profitability. Out of the 10,036 stocks, there's only about 300 of them. And I do share every single one. Every single one of my trades is shared online. Okay, all my trades last year, shared online. All my trades so far this year, all shared online. Okay? Now, I share them after I make them live here for you guys to view. And if you actually want to be there while I do them, well, I do have a what do you call it? Live trading service. Okay, that's every Monday. No, I'm sorry. Every morning, every week, every trading day. Every trading day we are trading. Anyway, let's progress. You guys give me a stock to take a look at. I'll give you my opinion, and I'll show you a few trades. And it's pretty interesting and pretty educational for those who don't know, because what you don't know, you don't know. So it might be worth 15, 20 minutes. Tune in and ask yourself a couple of questions. And question number one, you should be asking yourself, does it make sense? That's number one. Okay? Because if it doesn't make sense, no sense even being here. First one on the list is going to be, what was it? AbbVie. Wait a minute, we didn't finish Oracle last week. Let's do Oracle first. ORC. All right. ORC. Oracle. Oh, ouch. What? No. ORC is Orchard. Uh-oh. What the hell's OCL? No. Uh-oh. Why don't I know Oracle off the top of my head? Well, they say that's the first signs of dementia. You start missing, you forgetting the simple stuff. OCL? No, not OCL. No. Wait a second. That says Oracle right there. Oracle Japan. 115. All right, whatever. ORC. ORCL. I was right. ORC. Right. Forgot the L. Anyway, Oracle. What the hell's the matter with me? Okay, high, low, where was it? Where is it? Look at the motion. Up, sideways, down, up, down. What's going on here? It looks like it's in a downturn at the moment. So Oracle looks like it's going to go, and it is. Look at this, 4 down days in a row. She's heading down. I'm looking for a new bottom. Once I find a new bottom for Oracle, maybe. So I'm going to write Oracle for not this week coming up, but next week. In 2 weeks. ORCL. Take a better look at it then. Thank you. ORCL, yeah. WSP. Never heard of it. UNC. Drawing a blank. Melodic Angie. If you know it's not a dividend stock, why are we looking at it? Arnold, what's happening? Will the pain ever end for AMD? Advanced Micro Devices. Wow. User 2543. Now, I have no idea who you are, and it's just a minor pet peeve that people don't use a name or some kind of identifier rather than just a number. I mean, I know that. That's a terrible joke. I shouldn't say that one. Anyway, first thing came to my mind. Said, no, I probably shouldn't say that one. What's happening with AMD Advanced Micro Devices? Well, I don't look at that stock because it doesn't fit the criteria I'm looking for. 20 years of consistent profitability and consistent increases in dividends, weekly options, all that kind of nice, neat, fun stuff that I'm looking for. Yeah, it doesn't fit, so I honestly don't keep my eye on it, so I have no idea what's going on with it. I know, it's a mouthful, wasn't it? All right, so 2023 PEC, never heard of it. PEC. All right, so give me no for an Oracle. AEM. That's a no. AEO. On the vowels. Okay, now AEO, we did invest in this thing earlier this year. Let's take a look. American Eagle Outfitters. Here's the high a year ago. Here's the bottom now. She was at 25. Now we're just below 10. That's more than a 50% drop. So you thinking that we're going to have a problem in the economy? Well, we already do. Okay? That's a 50% drop. A little bit more than 50% drop in a year. So yeah, we're here, But look at where it first started falling. The high was last May. It said dropping. Look at the handoff at the beginning of the year. It went sideways and dropped some more. Okay, well, let's see what happens. Alrighty. So what is happening now? Ooh, that could be exciting. Well, let's take a deeper look. But before we do, okay? No, I have a certain system. Okay, I don't want to call it a system. I just call it a recipe, whatever you want to call it. I do things, 1, 2, 3, 4, one thing at a time. The very first thing I look at is always the 1-year chart. I'm looking for the high and the low. Where was it? Where is it? In which direction is it going? Up, down, sideways, down. Now she's going sideways again. Here's where we are now. That's the first thing I want to look at. It takes 3 to 4 seconds to find 5 things. It's like, which one of these things is not like the other? High, low, was, is, and direction. Not that difficult. It should take you 3 to 4 seconds. Okay, next. If that looks okay, you will see a few that are going to be a no, and we'll know exactly the difference between a yes and a no. It's not that difficult. Adults have a tendency to make things more complicated than it needs to be. Here's the current price. Now I want to look at the stock option for this week, which just so happens to be 25 April 25, which means the option that we're looking at this week is going to expire Friday afternoon at 3:59 p.m. Well, because at 4 p.m. it is no good. Okay, so the option has 5 days of life left to it. That's 100% of time value. So Monday, Tuesday, Wednesday, Thursday, Friday, and as each day goes by, the value of the option slowly decreases. So when Monday's gone, you just lost 20% of the valuation that we're looking for. Tuesday's gone, you just lost 40%. Okay? 30, and so on and so forth. Okay, I normally don't buy anything on a Wednesday or a Thursday because the time value just doesn't look that good. Then I got to go out to the further week. So I want to do most of my buying and selling on Mondays and Tuesdays because that's where I get the highest value for my dollar. And yes, I do this every week. Now for me it doesn't take long, but when I'm teaching it, it takes a little bit longer. Let's keep on progressing. Okay, so American Eagle Outfitters. After I look at the 1-year chart, I want to take a look at the numbers and see if it makes sense for me to take a look at this one for consideration for tomorrow. What am I looking for? Well, I'm looking for what can I buy it for? Well, the current price is right here, $11. Okay. Now, if I'm buying it at 11, I want to sell it to somebody else, or I want to sell somebody the opportunity to buy it from me at the exact same price I'm paying for it, or as close to that price as possible. And what I want to collect, I don't want to collect the valuation going up. I just want to collect the premium for the, what do you call it? I want the premium on the contract. Okay, it's an insurance contract and it's called a stock option. A stock option is actually an insurance policy. Okay, so whoever buys it or sells it wants to insure their position. This is what they originally created for. So you would buy a put if you thought your stock was going to go down, and if the stock went down, the insurance policy, the put, would increase in value, so you wouldn't lose any money in your stock portfolio. Same thing with the call options. Well, it didn't take long for some of those smart people to figure out, hey, I can just buy and sell these insurance policies as time progresses. Well, anyway, there's a lot of different trading strategies, but in essence, okay, a call option or a stock option is an insurance policy. And there's 4 things you need to take into account. 4 things for any contract to be valid. Number 1 is the beginning date. Number 2 is the ending date. That's easy. Okay? The beginning date is when they pay for it. The ending date is when it expires. And the moment we are talking about April 25. So all the options that are going to expire this coming Friday. That's what we're looking for. That's what I'm looking for. Okay, so I want to invest my money Monday morning, buy some stocks, sell some contracts, pick up some money. My goal is 1% for the week. It's simple, it's easy, it takes me less than 5 or 10 minutes. Okay, and I don't hide anything, I actually show you everything. We actually do some while we're here. Kelly, that's very nice of you. Okay, One Love. MSTY has been consistently down on dividends. Yes, I'm aware of that. I just get tired of answering the same old questions about the same old stocks over and over and over again. And I've been doing it for a while, so, every week somebody asks me about MSTY. Every week somebody asks me about Amazon. Every week somebody asks me about certain stocks that are always going to be a no because they lack consistency of profitability, or they're not old enough to buy a beer. Okay? I like companies that are at least 2 decades old, which means if you're 20 years old, you can buy a beer. If you can't buy a beer, that's an interesting analogy, okay, or it's an interesting metaphor. So I want companies that's consistently profitable. There's over 10,000 different companies, so why would I put my money someplace that's not safe? Okay? So if a company is consistently profitable for a quarter of a century, I think, that works for me. Okay? So you guys figure out what works for you, and hey, more power to you. But this works for me. If the company's been around for a long time, if they're consistently profitable, yeah, I will take a look at them. All right? And if everything looks good, I will buy them and I'll do a covered call. Because I'm looking at the same stocks over and over and over again. It's always the same ones. Okay? Because when you spot a winner just wins because that's what they do. Okay? It's like Johnson & Johnson. They've been in business for over 100 years. They have consistently increased profitability for a very, very, very long time. Okay? And if I can buy some of them, sell an option against them, bring in 1% every single week with the cream of the crop like that, why the hell not? My concern for me, simplicity, consistency, safety, preservation of all my of my capital, and cash flow, weekly cash flow. That's my goals. Okay, so you guys get questions, I'd be more than happy to answer them. I'd be more than happy to take a look at some of the stocks you guys want me to take a look at. So, that being said, let's take a deeper dive into American Eagle Outfitters. Okay, high, low, we've seen all that. Everything looks good here. Now, if I'm going to buy it tomorrow morning for the covered call, I'm going to buy it 11. Okay, great. If that's what I buy it for, I want to sell a call option. Sell it. Now, the terminology is important because the terminology will tell you what it is you're doing. Am I buying? Am I selling? Am I going long? Am I going short? Okay? It's very important for the terminology to be correct. A covered call consists of 2 strategies. Buying the stock, selling the option. Okay, selling the call option and buying the stocks. All right, so I'm going to buy the stock at $11, and I'm going to sell somebody the rights through a call option contract at $11. So if I'm buying it at $11, I'm selling at $11. What am I making? Well, I'm making this right over here. 15-cent bid, okay, which is more than 1%. Now that is the premium per share. So if they buy 100 shares, it's just $15, not a lot. But if it's 1,000 shares, well, it's 150. If it's 10,000 shares, well, it's 1,500. So everything goes in by share. So if it's 15 cents a share, why am I getting excited? Because 15 cents is not a lot of money. Well, hold on a second, okay? If the purchase price of the stock is $11, okay, 15 cents is more than 1%. I think it's closer to 1.25%. Well, no, or one and a. Anyway, it's more than 1% for 1 week. And what am I looking at? What am I betting on? Well, I'm betting on if the stock is in the right position, which we'll look at in a minute. If it's in the right position, I can buy it at 11, sell it at 11, and collect over 1% for the week. Well, what am I getting out of it? Well, I'm getting over 1% for my return. Well, what if it doesn't go up? Well, if it doesn't go up, all it has to do is just stay exactly where it is, because right now it's at 11. If it doesn't move at all, I'm still going to make my profit and get all my money back along with the profit. Well, no, what happens if it goes down? Well, that's when I said rule number 1. Never buy something you don't understand and you don't want to hold on to long term. So if I don't want to buy this and hold it to the day I die, I'm not going to buy it. But AEO is on my list. Okay? So it's on my list. The only thing I'm looking for now is 2 things. Number 1, is it the right time to buy it? And number 2, do I have any money available to buy it? Because remember, I find a good stock, and if it's going to give me 1 to 2% every single week, I'm just going to roll it over. Okay, my rules. Second rule, okay, never sell anything at a loss. Well, that's just a rule of mine. Now, to be 100% honest, I did take 2 losses this year. Okay, we are going into week number 8. No. Week 4. Yeah, we're going to week 4 for the quarter, second quarter. Week 4, second quarter. Also known as week number 17 for the year. I don't know what the hell I got week 8 from. I don't know. So week, wait a minute. Week 4, week 17. Forget it. So week 17 for the quarter. So out of 17 weeks of trading in 7 different accounts, okay, I've only had 2 losses. That's it. Only 2. So you're talking over 300 or 400 trades and only 2 losses. I think it's pretty good. Now, I did not say that my stock values are down. Okay, so some of my stock values are down, but I'm still bringing in more than 1% every single week. Meaning, if at the beginning of the year, January 1st, if my account had $100,000 in it, that means I want $1,000 every single week. Well, if my account had $150,000 in it, well, I want $1,500 every single week. So, starting at the beginning of the year, hold on a second. Kevin, AT&T, Ford, Kohl's on my list this week. Well, Kevin, let me write those down for a second. Hold on. AT&T, Ford, and Kohl's. Now, I do have some Kohl's, and I did get rid of my Ford a couple of weeks ago because, you know, I took the ride, got rid of it. Anyway, so what was I saying? I forget what I was saying. Damn it. So anyway, never buy something you don't want to hold on to long term. If I have stocks that are going to consistently give me a return every single week, well, why not? Okay, so yeah, I have some stocks that I've been carrying for the 5 or 6 months, which is something I normally don't do. I normally jump in, get my profit, and jump out. But these companies just so happen to keep giving me more than 1% every single week. Some of them, they're down in prices, so I really shouldn't sell them for a loss, because I have no desire to take a loss. Anyway, let's stop all that jabbering, and let's actually start looking at some trades so you guys can see what it is that I actually do here. No, Kelly, thank you for that. That's very nice of you. Espora, how are you doing? Luis, James, what stock are we looking at for weekly options this week? Happy Easter, thank you, Danielle. And buy and hold stock wants to take a look at Texas Instruments. TXN. All right, well, let's keep on doing this. Okay. Let's take a look at this. High of the year was last year, and that was 1, 2, 3, 4 times. 3, 4 times we hit it. 25.19 a year ago. Yeah, baby's in the house. All right. So a year ago, 25.19 was the high. What happened in the last 90 days? Here's our high. Here's our low. Look at the motion. Goes up, comes down, goes sideways for a bit, back down, back up. Now she's going sideways yet again. We're at 1074. Was the last trade for Friday? 1074. Okay, well, it's selling for 11 at the moment. All right. So, that being said, look at the last 30s. No, the last 30 days don't look that bad. She was up, down, up, down, up. Now she's going sideways. Look at this, 3 down days in a row. Now she's turning to go back up again. Bottom of the 30-day period is right there. So usually after a 30-day high, you got a 30-day bottom, then she goes back up again. Well, could this be Friday? The chance where she's turning around and going back up again? Could be. Unfortunately, I like 2 days to the upside, which means I wouldn't be able to verify this, whether it's time to get in or not, by Wednesday. Well, because tomorrow it could be the second day up. Tuesday would be the third, so yeah, maybe Tuesday. All right, we'll take a look at it. But if we were going to do the 11s, let's see what those numbers look like. And let me walk you through what a covered call will look like. Ingrid, how are you doing? James, David, how's it going over there? Madisha, Luis, Dr. Chris, how are you today? All right, so let's keep on going. Mitch Brooks, do I like to avoid earnings? Yes, I do. I've seen positive earnings where stock prices go down. And then I've seen negative earnings where stock prices go up. So for the most part, there's no consistency, in my opinion, with earnings. But the funny thing is, there is consistency when it comes to dividends. Because just before the dividends paid out, stocks have a tendency to go up in value. That right there is a valuable piece of information. But what do you do with it? If you knew a stock was going to move at a certain date, what would you do with that information? Would you buy the stock? Would you buy the option? Would you do a complicated trade? Would you do an easy trade? What about consistency? What if it does it every 90 days? What if? Interesting question. Makes you think. But earnings, for the most part, I do like to stay away from them. On certain stocks. Some of them are really bad. All right. So, first things first, let's get rid of the chart. Rid of the chart. Now, remember when I said simple, safe, predictable, consistent? Okay? That's what I'm looking for. Simple. One of the simplest, safest trading strategies is the covered call. That's where you buy the stock and sell somebody the rights to buy it from you at a certain price by a certain date. Okay, the date we're looking at is this coming Friday, the 25th of April. This way. Okay, April 25. That is the expiration date, this coming Friday. Okay, so if we sell this to someone, whoever we sell it to, better figure out what they want to do with it before 3:59 p.m. on Friday afternoon, because at that point, they are SOL. We all know what that means. All right, so we said we're going to do the 11s, because right now the stock is currently at 11. So if I buy it at 11, sell it at 11, what am I making? Well, let's find out. All right, the 11 is right there, and here it is. Now, I like Thinkorswim, which is this trading platform, through Charles Schwab, because it allows me to not have to learn new crap all the time. Okay, it's the same platform for the past 20 years. Okay, it's a great platform, so they've never changed it. They just left it alone. Like, great, I don't have to learn anything new. I have other things to do than learning new software all the time. All right. So I just want to do one contract. Why did I say that? Because, well, Thinkorswim, everything's preset. When I want to do a covered call, I just hit the button and it signs it up, everything right there for me. All I got to do is decide how many do I want to buy. Okay, do I want to buy 5 of them? Do I want 10 of them? Do I want 20 of them? Depending on what I want to do. Now, we're all different. We all have a different amount of money to play with. Okay, but for simplicity, let's just go to 1. Because once you know what 1 is going to do, well, you will know whether you can do 1 or 501. All right, because we're all different. Okay, now I'm going to change the order from a limit order to a market order. And let me tell you the difference between the two. A limit order is where you get to decide how much you want to spend on the stock and how much you want to get on the option. Well, just to let you know, a limit order can and sometimes does sit on the computer screen of the market maker unfilled all day. Me? I don't want to take the chance. I'm not chasing pennies. I'm chasing consistency of 1%. Okay, so if I get 1%, great. If I'm a few pennies off of it, it's not going to change my life. I'm looking for the consistency. Okay? So, a market order will fill instantaneously. As soon as the market opens, whatever it opens at, that's what I'm getting. So I do a market order only when I'm entering. Because when I'm entering first thing in the morning, the stock and the option are tied together. I already know what I'm going to make. A rough idea. Pretty damn close, most of the time. So here's the order. Let me walk you through it so you understand. Buy 1 covered call, AEO 100s, that's the weekly. 25 April 25, that's this coming Friday. The $11 call option against the AEO stock at the market to open to open. Now, to open, it's 2 orders, buying the stock and selling the option at the same time. Come on, get out of there. All right, that doesn't want to disappear. All right, heck with it. All right, the next line is the break even. Okay, basically what that means is anything over this price right here, the break-even price, $10.54, is going to be some type of a profit. Well, the stock is currently at 11. Okay, the last trade was 10.74. So if my break-even is 10.54, well, here's the breakdown. If the stock goes up, I win. The stock stays the exact same, I win. The stock comes down a little bit, I'm still winning. I have profitability as far as 10.54. So as long as the stock stays above 10.54 by next Friday, I'll have some type of profit. Okay? Anything over 11, I have 100% profit and I have all my money back. Well, I don't really care if I get all my money back, but I do want to have some type of return on a weekly basis. Well, that's what I'm doing. I'm buying assets and I'm creating weekly cash flow with good quality companies that have consistently increased their profitability for at least 2 decades. Well, I think that's a winning combination. Okay, it's a good company, it's a safe place. Anyway, let's go. Maximum profit, $46. Now, I know $46 doesn't sound like a lot, but I'm thinking and I'm hoping by the time you are all retired, which eventually you are going to be, you have 2 choices. Invest the money yourself, which is hopefully why you're here to learn, or 2, give it to someone else. If you're going to invest your own money, great. Do it someplace that is simple, safe, predictable, consistent, something that you can handle. This is a great starting point. Okay, and don't think I'll be offended if you stay here, learn a whole bunch, and then go someplace else and learn a little bit more. I won't be offended whatsoever. But it's a good place to start. If you can get 1% every single week, that's over a 50% per year return. What are you giving up for it? 10 to 15 minutes every morning. Once you get really good at it, it's 5 minutes every morning. Okay, because it's not that difficult to see. Now, it's kind of like driving a car at first. Okay, but then driving a stick shift at first. Yeah, there's a lot going on that eventually, after you do it enough, it gets simpler and simpler and simpler. Okay, so let's go figure out what we're getting. So yeah, $46 is not a lot of money for the first contract, but let's do a little bit of math, find out exactly what it is, and once you see what it is, you'll understand. Calculator, here we go. All right, so maximum profit, $46 per contract. $46 per contract. Divided by what does one contract cost? $1,054. 1054, and that's a grand total of, holy cow. I'm gonna write that one down. 4.3. Well, 4.3. That's nice. I'm looking for 1%, and this trade right here is offering 4.3%. Well, let's see if it makes sense. That's the trade. Let's see if it makes sense. Okay, let's get rid of this. Let's get rid of this. Go back to the beginning. Back to the very beginning. Very good place to start. Okay, have some Sound of Music. Not quite time to jump in. Now, you're going to make most of your money buying low and selling high. Well, the low of the year was last week. Okay? The week before last. 2 weeks ago was the low of the year. So you get a choice to make. Do you think it's a good investment? Do you like AEO? Well, the numbers work out lovely. Okay, it's a good company. Okay, so the question you need to ask yourself, beyond, we have all been carrying for a few, but still sell calls. All right, hold on. I'm missing a bunch of questions, and I don't like when that happens. Okay, here we are, right here. Whatever! I was a broker for 33 years. Holy cow. ORCL, Oracle, yeah. I don't know why I was thinking ORC. Alright, anyway. What was you look at 4.3 premium? Oh, Antoine. That was AEO, American Eagle Outfitters. Not quite a buy signal yet, and for me. Okay, but it looks interesting, like it could be coming in the next couple of days. If you like, of course. MP. AND, sold cash secured puts Tesla. Okay, cool. Okay, so Antoine. Make sure you ask tomorrow morning in the morning trading group. I'm pretty sure you're in the morning trading group on Mondays. Anyway. Austin's in the house. Beast, yes, Forster. Yeah, Austin Ford is on the list. Mogila. Okay. Rock, okay, Rock, got it. What do I think of rug pulls? Hate them. It's kind of like the pump and dump, same thing. Okay, I don't do that. Okay. PBR. Oh, peanut butter and raspberry. What's that? Something oil company, PBR? British something. No, not British. Brazilian. PBR. Okay. All right, so that's AEO. Let's go on to the next one. Next one is AbbVie. ABBV. AbbVie. ABBV. Here we go. AbbVie. Yay! All right. Quickly. First thing, always is the 1 year chart. High, low, where was it? Where is it? Look at the direction. Down, up, down, up, down. What's going on here? We're going to zoom into that real quick to see, is it even worth something to take a look at? No, it's not. It drops. Here's the bottom, goes back up, comes back down again. It's this exact same thing we just looked at with Oracle. Okay, just put it on the list for not next week. AbbVie, A-B-B-B. Okay, next on the list, Caterpillar. Ooh, love Caterpillar. Pricey. Interesting. Okay. High low look at it, sideways, up, down, back up again. 335 to 330. Ooh, no, 294 would be the three. 295. Three. Okay, yeah, the numbers work. All right, well, let's look at Caterpillar. Rugford. Oh. But to be honest, don't you think it's an interesting business model? Oh, okay, rug. Okay. Yeah, it's an interesting business model for those at the top. But how do you feel about those at the bottom? Because one day you'll be at the bottom. Rug pull is a. If you guys don't know what a rug pull is, it's kind of like the pump and dump. That's where you get a stock, and then all of a sudden it's buzzed through all social media. Everybody says, buy this, buy this, buy this. It's wonderful, it's great, it's awesome. They keep pumping up, pumping up, pumping up. And as soon as it goes up to a certain value, they pull out the rug from underneath you, sell off everything they own. They make a big, huge profit, and you're stuck with a dud. That's the rug pull or the pump and dump. Okay? I don't do those kind of things. I only look at companies that have a bare minimum of 2 decades of profitability. Nobody's going to pump and dump on Johnson & Johnson or Coca-Cola. There's just way too many shares out there. You need a huge bankroll to do that. No, it's just dishonest. I don't do that. Caterpillar. Let's take a quick glance. The high, the low, where was it? Where is it? Look at the motion. Almost the exact same as the last stock we just looked at. Sideways, up, down. Now she's back up again. Well, everything looks okay. So let's check the numbers on Caterpillar. A year ago, 352. The high of the year was in the beginning of November of last year, 418. Right, so the last 90 days. Check that out. The high, the low, where was it? Where is it? Look at this. Down, sideways, big drop, retrace. Now she's going sideways again. Can't really see where it's going, but it does have that upward trend appearance to it. Okay, we don't know yet because we don't know what's going to happen. Anyway, 20 right there. Here's the last 30 days. This is a little clearer of a view. Okay, 30 days ago, drops, comes up, now she's going sideways. That is almost the exact same as the stock we just looked at Oracle. Almost the exact same. You can have the same answer. Wait for 2 to 3 days to the upside for a clear vision to go back up. If it's not clear, don't jump into it. If it doesn't make sense, don't jump into it. Flippiana, good evening. Anyway, that's Caterpillar. We'll put that on the list for 2 weeks. AbbVie, yep. Oracle, AbbVie, and Caterpillar all looked almost the exact same. Pepe, what the heck is Pepe? Have I ever even seen this one before? PEPE. Yeah, it's a no. ConocoPhillips. Ooh, that one looks great. High, low look at this. Down, side is big drop. Now that is the click going to the upside. Well, that looks good. Great. Now let's take a look at the number. Really not that difficult. Look, high, low. Now it's going back up again. Down, sideways, down, back up. Simple. Stop making it complicated. It's really not that hard. The numbers. Right now it's at 88.80. So we're going to be looking at the 89s, and the 89s are going from 190. That's over 2%. Now, just in case you didn't know, if you can get 2% every single week, that's over 100% return for the year. Well, that makes sense to me. 100% for the year, yeah, I could go for that. That works. All right, anyway. So the chart looks okay. The numbers look okay, so let's actually look deeper into the charts to see if it is the right time to buy. Okay, so the high of the year was last year, 130. Last 90 days, which is the last 3 months. Okay. High low was the same thing. Down, up, down, up. That is definitely going to the upside. Okay. It's like a seesaw. Up, down, up, down, up, down. So down, up, down. That's what it looks like. Now, just because it looks that way does not guarantee that's what it means. Okay, just because it looks that way, you should look a little bit deeper. Number one, do you like this company? Number two, is this a company you picture yourself buying, owning, and keeping for the rest of your days? But if somebody offers you a profit on it, fine, take it. Because it's not a profit until you take it. And if you can get a profit on this one, be great, and then move on to another one next week. Because remember, every single week there's a new set of companies getting ready to pay a dividend, which means a new opportunity every single trading week. That's what I'm looking for. Every week there's a whole bunch of companies to trade. So yeah, I pick at them one at a time. Does it look like it? Well, so far this one looks pretty damn good. Okay, let's look at the last 30 days. Okay, up, down, now she's going back up again. It's actually that clear. So, let's take a gander at it. Wait a second, before we do that, why not, let's take a look at the seasonality chart. Well, the seasonality chart gives me an idea of what normally happens throughout the year. Now, seasonality is kind of like just what you think it is. Seasonal. Winter, spring, summer, fall. You know, so the chart we're looking at all the way to the left is January 1st, all the way to the right is December 31st. It gives us an idea of how does the stock react from the beginning of the year to the end of the year based on 10 years. Now, you can set your chart any way you want. I set mine for 10 years because I think 20 years is too much history, and I think 5 years is not enough, but I like the number 10. So for the last 10 years, represented by the red line, the blue line, well, that's this year. This little blue dot here, that's the last trading day. That was last Thursday. Because there was no trading on Friday, no trading on Saturday, no trading on Sunday. So yeah, here's where we are now. This is the next couple of weeks. I want to zoom into that and see what this stock normally does this time of year. Now we have a couple of awkward situations about that. Mainly, this red line represents 10 years of average movement on normal conditions. Well, we are not in a normal situation. So how is the stock going to react this year as opposed to the last 10 years? Well, the last 10 years, this thing was going down this time of year. But this time, let's go back to where we are right now. That's history. That's what already happened. Okay? We're going to find out right now. Okay, right now, our high was 3 weeks ago. She dropped 2 weeks ago. Now she's heading back up again. So great. So you got a couple questions to ask yourself now. Number one, does it make sense? Number two, do I like ConocoPhillips? Well, to be honest with you, I don't own any of it at the moment. Okay, this is the first time I'm looking at ConocoPhillips in a couple of weeks. Well, because a ConocoPhillips pays its dividends every 90 days. So when do they pay their dividends? Well, I want to look at it just before they pay the dividends. Well, what's happening here? All right, here's the bottom. Now she's going back up again. Let's see what an 89 will look like. Because it's currently at 88.98. So the closest strike price is going to be the 89. So let's get rid of this. Let's change this back to the covered stock. Let's look at the 89 right there, and just one contract at the market because I want it filled first thing in the morning. Right, here's the trade. Buy one covered call of COP 100, that's the weekly, 25 April 25, that's this coming Friday, 5 days away. The $89 call option against the COP stock at the market to open. Well, that's the order right there. Now, if you didn't know, some of you may not know, the screen you're looking at behind me is being recorded as I was saying, the screen behind me is being recorded on YouTube. So if you have any questions, you can go to YouTube at the that10minutetrader.com on YouTube, and then look for the video for today, and then rewatch it if you want to. Because basically, with every recording, you can rewatch everything I did or that I'm doing as I'm explaining. Okay, so one covered call. Here are the numbers. Let's get out the calculator and see what the rate of return for ConocoPhillips would be. Okay, maximum profit 227. You're probably thinking to yourself, that's a better number. Yeah, wait till you see how much that cost you. $8,673. Now, it may sound like a lot of money at first, okay? Well, 'cause if you're working up to your, your retirement. Because if you already retired, you already have a large chunk of money, normally. Okay, now if you're just getting started out, like, you got 10, 15, 20, 30 years before you retire, well, yeah, you got a long way to go. Well, just take your time. Rome wasn't built in a day. The stock market's been around for over 400 years. It's not going anywhere. Okay, you missed a trade this week. There'll be another one next week. Now, I remember the first time I heard that, it just peeved me. No, I want to learn now. I don't want to miss a single trade. Yeah, don't worry about it. Okay, there's probably people out there in the audience. Yeah. No. I don't want to miss a single trade. Don't trust me. There's another one tomorrow, and there is, and there's another one next week, and another one next week, and another one next week. It's predictable. It's every 7 days. Every Monday, I go through the same thing, because, well, number one, I'm retired. I got nothing else to do. Number two, it's my money, and I don't trust anybody else with my money. Okay? So you got a choice. When you get to retirement age, you got a choice. Number one, take responsibility, invest my own money. Okay? Or two, I don't want to do it, you do it. You're not going to be, it's amazing how many people say, no thank you, you do it. But I can almost guarantee, nobody has more interest in your money than you. Okay? And if you can get 1% every week, which is a 50% per year, ain't nobody that I know of is going to give you 50% per year. I think there was one hedge fund manager that did do 60% a year. I don't know how many years in a row he did it, but I'm working on doing my own hedge fund eventually. Mitch, HPE, that's Hewlett Packard. And yes, Mitch, that one is on my list. Lunar, stocks are just a measurement of rich people's feelings. All right, Lunar, I'm going to disagree with you. Okay. Perillo, 99, Buy American. All right, I like that idea too. Do I use tarot? No. All right, let's look at some more. PBR, we wrote that one down. Nancy, AIYY. I think I looked at that once. Okay, the Abyss, do I use tarot? No. Ralphie, good evening. Share Doctor, are you teaching covered calls? Yes, I am. Donald Sack, how you doing? Ding D, what's happening? Julia, good evening. It's Buddha. Good evening, Buddha. Big Bob, thank you for sharing the information that a lot of us need help on. Well, Big Bob, that's why I'm here. Nurse, good evening. Anthony Flores, good evening. What ETF should I invest in? Okay, Anthony, you're new here. I'm good with names. I know who keeps coming, who doesn't. ETF, electronically traded fund, you're basically giving your money to a computer to do for you. You're one of those people who say, I don't want to do it, you do it. Okay? An ETF is nothing more than a computer picking a bunch of stocks doing the exact same thing I'm trying to show you right now. And you figure out what works best for you. Pete, how much do you make weekly? I make over 1% weekly, Pete. Big Brain, STLA, Stellantis. Ooh, didn't we take a look at that the other day? It's on the list. Big Brain, happy Easter. Steve-O, show us one soon. Steve-O, we already showed you two of them already. Apologies, but have you already explained the covered call? Yes, I did. Steve-O, thank you. Is Apple on your radar? Yes, it is. Let me write it down again. AAPL. So as soon as you guys stop asking questions, I can start looking at more stocks. Tim McCarty, how are you today? Okay. Tessa. Do you hold positions overnight? Yes, I do. What did you lose on? Altria and Riley. Carmen, good evening, Carmen. What did I lose on? E and V. All right, I'm going to stop it right here. Let's take a look at a bunch of stocks, and we'll keep on keeping on. Okay, so COP. I didn't finish with that one, did I? So COP has a 2.6% return for 1 week. Now, 2% or more is over 100% for the year. If you can get 2% every single week, and this year, for some strange reason, the numbers are ridiculously high. And you would think that in a falling market, the numbers wouldn't be as good as they have been. Well, the rates of return that I've been seeing since the beginning of January have been higher than I've seen for the past 5 or 10 years, which is kind of weird, but you know, hey, more money, but I'm okay with it. So we did this one already. 2.6%. So that's ConocoPhillips. Let's put that one out of here. Let's get back to where we were. And back to where we were. Memories, the corners of my heart. Okay, we have all been carrying a few, but still sell calls. Dino Monkey, absolutely. Simone, what's happening? Hey, my friend, how are you doing? I'm doing awesome. Thank you very much. Chris Money, hey, how you doing? Okay, Chad Robertson, Amazon. I do Amazon because they don't have dividends and they're not profitable. All right, right there, and ZAZA. Lil, what's my thoughts on Capital One Finance? I love Capital One Finance. COF. And Capital One Finance. Ooh, take a look at that chart. Move this over here. Doesn't take long. High, low look at the motion. Down, up, down, up, down, up. Okay, 162. Well, 162.77. That'd be closer to the. Damn it, you can't use these numbers because after hours trader is right here. This is the last trade, and they moved all these. So it's going to be complicated. But I do like this company. I do. So let's just see if the numbers are going to work on the chart. So a year ago, Capital One Finance is at 144. The bottom of the year was the beginning of August. And that was 128.22. Well, the last 90 days looks like the same thing. Here's the high, here's the low. Look at the motion. Sideways, down, back up again. It is definitely going to the upside. Okay, so as it's definitely going to the upside, what is the best trade to do on this one? Well, we still have that same old problem. Okay, the pesky old problem is, does it make sense? Do I like this stock? Do I want to own this? And if I do own it, am I going to sell a covered call against it every week and bring in cash flow? Well, those are the interesting questions. Okay, fine. Well, let's keep on keeping on. So that's the 163. So yeah, I like Capital One Finance. I'm gonna write that on my list. Not COF, not COP. You dumb turd. Okay. Next, RBLX. What is RBLX? RBLX. Interesting. Robolox Corporation. I like this right here. I want to take a closer look at that. But always A, B, C, or always 1, 2, 3. First is the 5 things I'm looking on the chart. The high, the low, or was it, where is it, what's the direction? Up, down, up, down, up, down, up, down, up. Okay. 59.71, the closest one is going to be the 60. All right, so if I'm buying it at 59.71, well, the closest strike price is going to be 60. And that is selling for 152. That's more than 2%. Okay, how do I know? Well, if the stock is 59.71, 1% of $59. Are you ready for this? 1% of $59 is 59 cents. You just move the decimal point over 2 places. So, what I'm looking to obtain on a $59 stock, I'm looking to obtain 59 cents. Well, what is the offer at the moment? $1.52. That's close to 3%, but it is definitely over 2%. Well, yeah, that sounds good. Okay, the chart, 1-year chart looks good. Well, let's dive in a little deeper and get a little closer look to see if it really makes sense. Okay, so a year ago, we're at 35.53. A couple of weeks later, there's the bottom, the second week of May, 29.43. Well, the last 90 days, same thing. The high, the low, where was it, where is it? This one here has a better pattern. Well, a better pattern gives you a better idea of where the momentum is. Well, because the momentum is created by you and me, the buyers and the sellers. Well, look at the momentum over the last 3 months. Up, down, up, down, up, down, up. Well, it looks like it should keep going up, but from here to here, how much of a move is that? Okay, we're going to zoom in a little closer, and that might not be a good place to jump in, even though it looks like it is. Well, let's run some numbers and see if it makes sense. So the last 30 days, now it looks a little different, because your 30-day high is here, your 30-day low is here, and look at this big move it already made. Okay, does it have enough momentum to keep going up to challenge this right here at 64? Does it? Well, let's ask a few interesting questions. Well, the number one question is, at the bottom here and the top here, how much of a move is that? All right, well, if the bottom's at 50 and the top's at 61, okay, that's an $11 move. Well, that doesn't sound like a lot, but an $11 move on a $50 stock is over 20%. So here's a conundrum. A 20% move, okay, if you bought something and it went up 20%, should you take the profit, jump out, or do you want to jump in and see if it can go up to 25 to 30? That's a tough question. For me, no thank you, because I'd be one of those guys getting out a hell of a lot sooner than that 20% jump, because from here to here, that's a 20% move. If you don't take a profit, it's not a profit. Remember, it's never a profit until you take it. And secondly, nobody ever went broke taking profits. So yeah, it could go higher. Yeah, you could do a covered call on it. There's a lot of things you could do. But what makes sense? And this always comes down to the same questions over and over again. 1, does it make sense? 2, do I like this company? 3, do I like this company at this current price? 4, am I willing to buy it and not sell it and create a cash flow on a weekly basis from it? Am I okay with that? What do the numbers look like? Well, take a look at the numbers. At the money, it's over 2%. 1 strike out of the money, that's 1.5%. 2 strikes out of the money is 1%. 4 strikes out of the money is 20, which is 30%. No, 0.3. Okay? So even if the stock goes down, you have a great chance of making a decent amount of money off this on an ongoing basis. So yeah, it's a tough one. It is, because it's 20% up. Does it have enough momentum to go up another 5 days? Well, another 5 days, and that's like 3 weeks to the top side. That's dangerously close for profit taking. Profit taking stocks drop. Okay, well, that's your choice. Do you like it? Do you like it at these numbers? Okay, next, let's keep on keeping on. BR Records. Hello, traders. Good morning. Good morning to you. Okay, Bear. Bitcoin just jumped. Cool beans. I don't do Bitcoin, but alrighty. Alright, let's keep on going. J Proof. Never been rugged. Okay. Bill, hey, how you doing? Bill, PBR, peanut butter and raspberry. It's already on the list, Bill. Johnny, is it normal that when I sell stocks through Vanguard, the trade always goes at the end of the day? It depends on the kind of trade you do, Johnny. If you do a market order, the buyer, if you do a market order, the market maker is required to fill it instantaneously. But he fills it at whatever the current price is. Okay? Now, there's also in what are called MOC, which means market on close. Okay, so if you buy something and you don't have it set right, because it sounds like you have it set at market on close, which means the trade always goes at the end of the day. Yeah, that's an MOC trade. Okay, a market order's right away. A limit orders, you get to set whatever price it is. Okay, but the market maker can fill it whenever he wants. But there's a BOC, which is the beginning of the day. No, BOD, it's beginning of day. And then there's MOC, market on close. Oh yeah, market on open. Sorry, MOO, which is market on open, and then MOC, market on close. Okay, so I like market orders. That way they fill instantaneously. I don't like waiting around. Life's too short, especially when you get into your golden years and like you just do nothing all day. I watched My Fair Lady and another movie after that. So if you know what My Fair Lady, it's a 3-hour movie, and then I watched another movie after that. Okay. Yeah, I had a nice day today. It was nice, quiet, peaceful, all kind of nice, neat, fun stuff. TMC, Plum Daddy. What the heck is TMC? All right, let's go to the next. Next. HESM. What the heck is HESM? HESM. It's a monthly. It's a no. Sorry. Comic Book Journey, BTC. Okay, as far as I know, that's Bitcoin, and that is not a dividend stock. That is a no. Yeah, okay. He goes for weekly dividends. Actually, making bacon, I actually go for weekly options on dividend stocks. There's a little bit of a difference. Alrighty, let's keep on going. User 9618, good evening. Memphis, Tennessee, way to go. Alrighty. Ellie, good evening. Cool Spirit, I want to learn covered call. Do you have a book I can read? Oh my goodness. Cool Spirit, I've written 14 books. And they're all available on Amazon.com. There's a link in the bio. Alright, let's keep on going. Don't. What stock is this? This is HESM, which was a no. Next, GHI. What the heck is GHI? GHI. It's a no also. Here we go. Ford. About time we get to a good one. Ford. There we go. All right, Ford. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at the movement. Down, up, down, sideways, down, then back up again. We're at 963 at the moment. Okay. Do you like Ford at 963? Well, let's take a look. So, 963, well, the 950 is going for 29, but we're going to lose 10 cents right off the top. Okay, because if we buy it at 960, sell it at 950, we're losing 10 cents. Okay, well, you take the 10 cents off of this 29, I walk away with 19. That's 2% trade. Okay. Ford at 2%. I'm going to write that one down. Ford, 2%. All right. Well, let's keep on keeping on. All right. A year ago, Ford was at 1260. The high of the year, 1485. And that was back in July, halfway through July. That was the high. Okay, the last 90 days, look at that. High, low, where was it? Where is it? Look at the motion. Same thing as the last stock we looked at. Down, up. Has a nice movement here. Can it keep on going? It's a lot of movement. But it came and it pulled back a little bit last week. So could that pullback been the profit taking? Now it's continuing to the upward journey? Could very well be. Let's look a little bit closer. The closer you look, the more detail you see the movement. Okay? Up, down, up, down, up, down. Now it looks like it's going back up again. But is it? Well, Thursday was an up day. Was Tuesday and Wednesday enough of a pullback to take care of this profit? Because from here to here is over $1, which is over, I think we did this last week, which is over 10%. So if that's over a 10% movement, this could be pullback for that 10%. Now here's a new bottom. Now she could be going back up. It could be. But do you like Ford? And do you like Ford at $9.63? I'm loving Ford at $9.63 because what I know is Ford's been in business for over 100 years. Okay, Ford's book value is higher than the current stock price. Okay, the revenue per share for Ford is higher than the current stock price. So there's a lot of good numbers going with Ford. Now, granted, they don't have the greatest dividend. What do you call that? Track record, but they have consistency. They have been in business for over 100 years. So that's going to be a tough one. Yeah, Ford's on my list only because it's Ford. All right. So am I making my 1%? Yeah, I'm making over 2%, closer to 3 on Ford. So that being said, let's do one on Ford at the 950. Covered stock. 950. There it is. One contract. You'll see, you get a better idea of what one contract of Ford stock looks like as opposed to, one contract of, was that ConocoPhillips or was that other one we looked at? AEO. Or Oracle. That was a big one. All right, anyway, here's the order right here. Buy one covered call of Ford, 100, that's the weekly. 25 April 25, that's going to expire this coming Friday. The $9.50 call option against Ford at the market to open. Well, the current price is $9.59. All the stock has to do is stay $9.50 or above, and I'm going to make a profit off of it. It has no dividends. Yeah, Ford stock has dividends. Why are we looking at it? Thank you. Okay, nothing happening over there. Alrighty. Alright, so profit 2150. Alright, well, let's take out that calculator and see what 2150 on that contract looks like. 2150 divided by 921. That's it. 929 for one contract of Ford. Okay, divide 929, and that comes to a grand total of 2.3%. Okay, well, here's a few things. Number one, doesn't make sense. Okay, it's Ford Motor Company. Now, you may not like the cars Ford makes, but you can't negate the fact that they have been around for over 100 years, and they're probably still going to be around. The last financial crisis, they're the only car company that said, nah, we don't need your money, we're good. All the other car companies took the money because they needed it. Not Ford. Apparently they were doing something where they didn't need money from the government. Well, that's a good thing. But does it make sense to buy Ford, hold on to it, and get that nice little premium? Yeah, Alcon, I know, I've heard that before. Repair daily. Also, first on race day. No, however you want to do that. All right. RBLX does not pay dividends. Okay, why are we looking at it? I'm under the same impression you are. Bill, JPR stock. What the heck is JPR? JPR, never heard of it. It has no options. It's no. Bill, JPR has no option. That's a no. K, Harry for good. Enbridge. Enbridge is a monthly. Thank you, Angie. Ed, my one pick this year is on Ritz, BDN. Ed, well, let's take a look at BDN and see what it looks like. BDN. Hell no. Sorry, Ed. BDN. I don't like monthly options. Okay, monthly options just don't pay the same amount of money. Alcon Volvo, is that VLV? No. What is Volvo stock symbol? Okay, so Ed, hope you don't mind. BDN doesn't work for me. Okay, if you have something that has weekly, great. Lower highs, no bueno. That's a good position to be in, though. Look at that, Ed. 30-day high, 30-day bottom. Now she's going up. Great, if you like it. I don't do monthlies because the numbers just don't work. Austin, cool beans. Oh, Lumen now wants to take a look at Harley Davidson. HOG. Nice. Look at that bump up right there. I want to see that. Now, Harley Davidson's been around for over 100 years. Look at the price. $40 the high, currently getting close to 20, which is a 50% drop from the high. Okay, so how low do you think Harley Davidson could go? Well, they've already dropped 50%. Can they go lower? Maybe, maybe not. Well, let's take a look at the numbers. Well, before we do, $21.50 is the current price. So we're going to be looking at the 23s. I got to change that. Change it. The 23s are going to 65 cents. Well, that's over 3%. If you like Harley Davidson. Now, I bought Harley Davidson a long time ago. I bought it at 35, which is right there. Okay, I bought it at 35. However, it's down to 22. So from 35 to 22 is, I don't know, was that 20%, 30% drop? But I have no interest in selling it. But what I do with it is I do get a covered call every single week. And this week, more than likely, I'm going to end up doing the 24s. Because right now, we're at 22.51. Well, zoom in. All right, hold on a second. Let's walk through this one. A year ago, we were at the high. Now we got a 4 topper. Okay, a year ago, 40.14. Well, look at September. 4 times it almost hit 40. Okay, so 40 was the high for the year. Okay, last 90 days. Here you go. The high, the low, where was it? Where is it? Look at the motion. Down, up, down, up, down, up, down, up. Yep, that is clearly going to the upside. If you like Harley Davidson. Well, alrighty then. Let's zoom in closer. That's pretty plain to see. 30 days ago, we're at 24.5. Jump up to 26.5. Drop down to 20.5. Now we're going back up again. Okay, so the question is, do you like Harley Davidson? Jersey wants to take a look at Riot. Now, I do own some Riot, and I do own some Harley Davidson. RIOT. Okay, so here's Riot. Same thing. High, low. Where was it? Where is it? Look at this. Down, up, down. Still dropping. You love the digital board? Cool beans. Okay, we actually check out the movement. Up, down, up, down, up, down. Here's the new bottom right here. So we just gotta wait this one out. Now I do own some Riot. I forget what I bought it at, but I have no intention on selling it. But I am gonna sell a covered call against it. More than likely, I'll probably do the 7s or the 750s. Well, the 7s are going for 10 cents a share. The 750s are going for 4. I'll probably do the 7s because it's far enough away. Because we're at 640. The 7 is way up here. So more than likely, I end up doing the 7s and bringing in a nice premium on them. Yeah. Kelly Thomas, you're back. All right, thank you. VLVL. Okay, VLVL. It's not a stock symbol. Sorry. Next on the list, WSP. That's a no. UNC. That's a no also. PEC? What the heck is PEC? Nope. AT&T. Interesting. I don't think it's a yes though. Yeah, it's a no. Sorry. High, low. Now it's coming back down after a hike from 25 to 28, which is a $3 jump, which is over 10%. Now it's pulling back. No to AT&T. We're looking at AT&T with 3 weeks from now. Three weeks from now with AT&T. Kohl's. Now we're at Kohl's. Just to let you know, I do have some Kohl's. Okay. Evie wants to take. Jim Evie wants to take a look at NVIDIA. Sorry, Jim. NVIDIA does not fit what I'm looking to get. Okay. The dividends on NVIDIA are absolutely horrible. Book value's horrible. Okay, cash flow horrible, in my opinion. You got 2 talks going? Yes, I do. All right, so let's keep on keeping on. Kohl's. Now, Kohl's, the high of the year, 28. First thing I'm noticing, 28. Look at the low. Down to 6. 28 to 6. Well, that's more than 50, 60, almost 75% drop. That's a lot. Do I have to own the stock before I can do a covered call? Yes, you do. Lumina wants to take a look at Macy's. Probably not going to get to it tonight because I got way too many other things to look at. Heimsman, CLEU. What the heck is that? CLEU. Okay, it's something. Ooh. KR wants to take a look at SoFi. PLTR. Why does people put money into crap? KR. Go take a look at SoFi. Go take a look at dividends and how consistently they increase their dividends. The same thing with you, dude. Go check out PLTR. Come back and chat with me after you find out. Are you into dividend stocks? Yes, Bill, I am. Kraft Heinz. Okay. Kraft Heinz, I'll put it on a list. KHC. All right, so let's keep on. Not sure if you looked at, no, New Jersey, haven't looked at Macy's yet. All right, next on the list, Texas Instruments, TXN. Interesting. Okay. High, low is, look at the motion. Up, sideways, down, 147. 148, 555. Hell yeah, that's over 3%. Why the hell not, right? All right. Texas Instruments. A year ago, 160. The high of the year was in the beginning of November, 220. Look at the last 90 days. Okay. High, low was, is, look at this, down, up, down, up, down, up, down, up, down. What's going on here? Let's zoom in a little bit closer. This might be a no. Might be. No, well, not really. Okay. Up, down, down. Now she's going right here. So she is going up a little slowly. Maybe we'll write it down for next week. Not this week. Next week. So next Sunday. TXN. All right. Now we're going to look at PBR. Peanut butter and raspberry. Interesting. Petróleo Brasileiro. Brazil, you know, the Brazilian oil company. The high, low, look at the movement. Up, down, blah, 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 yeah, all the time. But bouncing off of this right here might look pretty good. If we zoom in a little closer before I do, does it make sense? 1180, we'll be looking at the 12s, 5 cents to 7 cents, 0, 0, 0. No, no, no. Terribly sorry, the numbers for PBR are going to be a no. Now, there are certain companies that fit this criteria exactly. It may be the perfect time to jump in, but the options are horrible, which means you could get stuck with a stock that's not bringing in any cash flow. Because these numbers don't look that good at all. That's just my opinion, of course. Chris the Lifts, Costco. COST. Okay. Hewlett Packard, HPE. 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 Ooh, interesting. Do you see that right there? High, low, was, is, up, down, up. 15, the 15s, the 49, the 1550s, the 25, the 16s. All of them look pretty good. Okay, well, let's jump in a little bit closer. A year ago, 1690. The last 90 days, okay, the high of the year, last 90 days. Down, up, down, up, down. Now she's going back up again. That's clear as day. Right there, clear as day. But that's for the 90-day chart. Looks great. Well, let's zoom in for the 30-day chart. Because 3 months ago, well, that's totally different atmosphere than when we are now. Because this week's different than 3 months ago, but it gives us a good idea of where it's flowing. Okay, so the last 30 days, well, see, it looks like we might have lost our opportunity. Now, this looks similar to another stock we looked at a little earlier. Here's the high, came down, back up, back down. Now it's going back up again. This was Ford, remember? I think it was Ford, or one of those stocks. But the bottom's here at 12. Went all the way up to 15.50, which is $3.50, which is more than a 25% increase. So on $12 stock, $3.50, that's 25% increase. Yeah, this thing's highly susceptible for profit taking. But if you want to put your pony on this, you got 2.5 weeks going up. Could it do a third week? I don't know. Do you want to gamble on that one? That's a question you need to ask yourself. Okay, Bill, we already looked at Texas Instruments. AIYY. What the heck is AIYY? AIYY. Oh, it's a yield max stock. Yeah, that's a no. Oh, STLA, Stellantis. STLA. This one came up a little while ago. Look at that. High, low was, look at the motion. Down, sideways, down. Now she's going up. Okay. Look at the numbers. So now this is a bad thing about Stellantis. Okay? The premiums are horrible. 0, 0, 0. Yeah. No. Because if I'm not making a safe, consistent 1% every week, and I buy this and it goes backwards, I can't sell an option against them because it's worth 0. So no. No to Stellantis. All right, next. Ooh, now I know someone's been waiting for this one all night. Apple. Love me some Apple. Now, interesting. I'd like to see what's going on here. Okay, up, down, back up again. 190, 197s, 420. That's still over 2%. Over 2% works for me. Okay, well, let's take a look. Apple a year ago was at the bottom of the year. Okay, a year ago. 164. That's the bottom for Apple. Top for Apple was at the end of the year last year. 260. Well, from there, the last 90 days, here's the chart. The high, the low, where was it? Look at the motion. Up, down, up, down, up, down, up, down. It's coming down at the moment. Not the greatest time to jump into Apple, in my humble opinion. Okay? Shooting up. They took a little bit of profits, coming back. Now she could be coming up again. Could be. Might be an idea to keep our eye on this one. Okay? No to Apple. Maybe Apple next week. Okay, next on the list. TMC. What the heck is TMC? Toyota Motor Company. No? TMC Metals. Yeah, that's a no. Monthly. I don't do monthlies. See? 16 May, 20 June, 15 August, 21 November. Those are monthlies. Those are months. There's no weeks in there at all. Which means I can only trade that once a month. Now, once a month is only going to give me 12 to 24% a year. No. Jeff, if you made money, why would you be selling your system? Jeff, I'm not selling it. I'm giving it away. I haven't asked anyone for any money, Jeff. Haven't. SLB, Schlumberg. Gotta love Schlumberg. SLB. Hi. Oh, Hertz. HTZ. Oh, I actually have some Hertz. HTZ. All right. Next on my list. Macy's. Now we're coming to Macy's. Interesting. Unfortunately, it looks like it's going to be a no. You know, when I say it usually takes 3 to 4 seconds to take a look at a good chart, or take a look at any chart, well, I'm looking for 5 things. Okay? The high, that's number 1. Number 2 is the low. That's for the year. I always want to look at the 1-year chart first. The high, the low. Where was it a year ago? Where is it now? In what direction is it moving? Okay, and it doesn't take long to figure it out. Up, down, sideways, up, down, up, down. Okay, not quite where we want to get into. So I'm going to zoom in really close and you'll see what I'm talking about. Okay? Down, up, down. So it's still in the downward spiral. So not the time to jump in, even though I do already own some. Okay? I have no intention on selling. I might dollar cost average down if it makes sense. Because to me, it's always going to be a numbers game. Does it make sense? Where's the best, safest place for me to put my money to get a consistent 1% every single week? That's my main focus on Monday morning. Now, I do have a morning trading group. It is a paid trading group. I'm not trying to sell anyone anything, but you know, you're all adults. You know how to find it. It's right in the bio. That's where all the information is. Next on the list, CLEU. Now, when somebody asked us about this, I said, what the heck is this? CLEU or UE? EU. Yeah, that's a no. KHC, Heinz Ketchup. KHC. Oh, isn't that lovely? Okay, couple of seconds to take a look at the chart. It looks lovely. Look at it. High, low. Where was it? Where is it? Look at the motion. Down, up, down, up, down, up. Okay, what's going on here? That's what we want to look at. It's enticing enough to make us look to stage two. Stage two is, what are the numbers? Okay, well, if I'm buying it at 29.51, the 29.50s are going for 38 to 41. Well, that's more than 1%. Actually, it's more than 1.5%. So that works for me. All right, so let's take a closer look at it. Bill, Ozark Energy Solutions. Never heard of it. Harry for Good, TD. We'll take a look at that one also. How much is my program? Jeff, good morning to you. All right, HTC, let's take a gander at it. All right, a year ago was the high of the year for Heinz Ketchup, $38.99. Okay, drops, back up, down, back up, back down, back up. Let's look at the last 90 days. So the last 90 days gives us a good idea of what the stock movement is like. Okay, high, low, was, is. Look at this. We got two bottoms right here. Okay, 90 days ago, look at the movement. Down, up, down, up, down, up, down, up, down, up, down. Unfortunately, it's a little bit of a downturn. So we're going to say no until she finds a new bottom. Look at the last 30 days. High, low, up, down, up, down. Well, what's happening here? Well, we're going to have to put that down for next week. What is it going to do? Don't know, but we shall see. Shall we? Shan't. That's the word, shan't. Shan't we? KHC. All right. That being said, Costco. Now, I'm going to bring up Costco real quick, only because I don't do Costco. It's out of my price range. So let's quickly take a look. COST. Okay, $994 per share. Yeah, good luck with that one. $997. So the 1,000 is going for $12. Okay, it's going to be $1,000 a share. That means $100,000 to do one contract. Okay, a lot of us can't do that. I can't do that. Well, I could, but I ain't going to. It's a little too risky for me. And if I'm only making 1%, I can get 1% on a $10 stock. Something about paying $1,000 per share gives me the willies. I can't do it. Okay, some of you people might like Costco, and some of you might have hundreds upon hundreds of thousands. Yeah. Okay. Anyway, but look at where it is. The last 30 days. Okay. So here's your last 30 days. Up, down. Now she's up. Where do you think is going to go next? Because the bottom is here. 870. From 870 to 1,000 is $130. $130 on a $1,000 stock. That's 13%. It jumped up from here to here, 13%. Do you think it's going to keep going up? Don't know. It's a lot of my price range. A little rich for my blood. Okay, Free Speech wants to take a look at Bank of America. That looks like it's going to be a no, dude. Look at that right there. Oh, wait a minute. No. It is trending up, even though, actually, that is interesting. Got a gap up here. Now it's a pullback. Filled in the pullback, and now it's going back up again. Could be, don't know. A little unclear. Right? I like 2 clear days to the upside. That's not clear. It's a little foggy. So we're going to take a look back seat for Bank of America. I'll put it on next week, see what it looks like. BAC. Let's take a look at Schlumberg SLB. SLB, here we go. Ooh, I like that. Let's take a look. High, low, was, is. Look at the movement. Down, up, down, up, down, up, down, up. Okay, so it's going up 35.11, 35.50, 73, more than 2%. That works. Let's take a better look. All right, a year ago, Schlumberger is around 49. Okay. High of the year, middle of July, 51.04. The last 90 days, okay, last 3 months, basically just went sideways, you know, down, up, down, up, down, up. Look at that movement. That looks great right there. Nice movement. But that's the 90-day chart. What's the 30-day look like? 30 days is going to change everything. High, low. Now she's going up. Nice. 1, 2. 2 clear movements to the upside. So Monday, tomorrow, if she opens up higher, then that's a yes to jump in. Because I love a 30-day high to a 30-day bottom. Now she's going back up again. Because now we found the bottom 2 weeks ago. Now she's going up. Does it make sense? That's a very important question. Okay, so let's keep on looking. Before we go further, let's take a look at the seasonality. Find out what does Schlumberger usually do this time of year. Well, that don't look good. That don't look good at all. Okay, it's all choppy. Ugh. But now, considering we're not in normal time history, okay, this is what it looks like now. Now the current trend supersedes everything. You can't deny it. That's a 30-day high. That's a 30-day bottom. And if she goes up this way at 35 at the current moment, the 35 is going for 73 or a dollar to even. This 35 is going for $1. The 35.50 is going for 73. Both of them are close to 3%. Well, that works if you like Schlumberger. It's always going to come down to that. Always going to come down to, do I like this company? Is this where I want to put my money? Do I feel safe with this trading strategy? Those are all very good, valid questions. Sometimes it works, sometimes it don't. It's not for everybody. It's slow, it's boring, it's only 1% a week. Now, I do have to admit, 1% a week is over 50% per year, which I like that. It works for me. Is this a new TikTok? Alcon? Yes, it is. I was already following you. Okay, so you're on the other channel. I got 2 channels. Huh. Anyway. OZSC. Bill wants to take a look at OZSC. Ozark Energy Corporation. What are you, freaking nuts, dude? Hell no. TD. Is that something bank? Toronto Bank? Monthly? No, sorry. Nike. Now, Nike's one I've done before. Interesting. You see this right there? That's cool. High low is, look at the motion. Sideways, down, up, down, back up again. 55.24. The 56s are going for 130. That's over 2.5%. Well, 2.5% is like 125% for the year. Well, that's a nice amount. If you like Nike, well, let's take a better look at it. Okay, the B guy, we're looking at Nike right now. Mikey G. Hal does the same. And as SLB, I am 35% down in HAL. Okay, Mikey G, how are you doing this evening? Okay, now Mikey G, I got Halliburton also. I don't have any Schlumberger, but I do have Halliburton. Okay, so a year ago, Nike is at 94.60. Looks like we have a double high at 98. And that was both the beginning of June and towards the end of June. All right. Now, right there, Okay, at the end of June, we went from 94 and had a big drop from 94 down to 74, a $20 drop. Now, a $20 drop on a $95 stock, well, that's a little bit more than 20%. Well, a big drop. Okay, then she goes back up, back down again, it's 90 days. Okay, here's the last 3 months. High, low, is. Look at the movement. Up, down, up, down. What's going on here? It looks like it's getting ready to go up, but it's a little uncertain. I don't like uncertainty here. Let's zoom in a little closer. You get a better idea of the uncertainty. Okay. Down, up, down, up, down. Now it's definitely going sideways. Still going up, but sideways at the moment. Is this a plot where you like Nike at 55? Well, Nike's been around for a while, but is it a company that you like? Okay, is it something you want to get behind? I don't know. I've been in Halliburton since May 23. Where have I gotten to Halliburton? Oh, that it. August. All right, Mikey GA. I got into Halliburton in August at 26. Okay, so I'm into Halliburton at 26. I originally jumped in at 32. I originally jumped in at 32, but I dollar cost average down to 26 for Halliburton. So let's take a look at old Halliburton. HAL. Yeah. Yeah, so I'm in at 26. And now it's at 22. So it looks like next week I'm going to be doing the 24s. Mikey. Okay, I'll be doing the 24s next week because I'm in it originally at 32, but now I'm down to 26. But we're at 20, 22 and a half and climbing. So the 24s look interesting to me. Or the 24.50s. I'll wait and see what it opens up at tomorrow. Okay, if she gaps up a little bit, maybe I'll go to the 24.50s. But definitely going to do the 24s. Oh, that's it. I'm caught up. Cool beans. So I'm caught up with all my questions. All right. Cool beans. You guys on Instagram, you guys don't ask any questions. I find that rather strange. And you guys on Facebook, no questions at all. Well, imagine that. Okay, Judy, we already did Apple. Okay. So Mikey G, you're in at 35 from May. Holy cow. Okay, now Mikey, it's down at 22. No, I don't know if you can dollar cost average down on it, but that'd be pretty damn good. From, what is it, 35 to 22, that'd bring you somewhere close to 26, 27 area. Sorry, you just tuned in? Well, good evening, Miss Judy. Nice to have you around. All right, next on the list, Hertz, HTZ. Uh-oh. Then we'll be caught up. Scott Cook, USBC, UWMC, WB. I guess my questions didn't show up earlier. Yeah, these are the only questions that showed up. Lumina wants to take a look at Riley. Okay, Austin, we already looked at Kraft Heinz. John, from my earlier question, why did you not hold your two losing positions and continued covered calls? Oh, John, great question. You ready? Here's why. Okay. Now, the Riley I took my loss on was in an account that was a margin account. Okay? You see where I'm going with this one? All right, so it was in a margin account, and everything in that margin account all went down to a point where I had no choice in the matter but to take something at a loss to cover the margin. Okay, I'm not one for throwing more money in. I'd rather just see something that's going on and then sell. So yeah, I took a loss on Riley to cover a margin. Now, on Alcoa, no, wait, it wasn't Alcoa, Altria, okay, M-O, okay. I was at an interesting scenario. I did a calendar spread. I don't know if you understand what a calendar spread is, but the put option was put to me. So I ended up shorting 1,000 shares of Altria. Well, then Altria just kept going up and up and up. So I had no choice in the matter to jump out of it and reverse the trade in order to recoup that loss. So I'm in the process of recouping the loss of Altria, so that won't show up as a loss. But getting Riley to show up as a profit from at the end of the year, that's going to be a tough one. I'm going to give it a try, but it's a tough one. AGNC, I think that's one of those companies that have absolute AG and have absolutely horrible premiums. Yes, it is. Okay, so no for AGNC, because see the numbers here? If I can't turn a decent profit after I own something, because stocks go up and then they go down. They go up and then they go down, and then they go up and then they go down. And guess what? They go up and they go down. That's all they do. They do not come to your house. They do not make the bed. Don't take the dog out for a walk. Don't do anything like that. They go up, they go down, and that's it. All right, so if that makes sense, yeah, AGNC, if it goes down, and that is a possibility, that is something you need to think of. If you're going to put your money into a company, you got to think both sides of the fence. If it goes up, great. Where am I getting out? If you don't know where you're getting out before you get in, you shouldn't be playing this game. You should have in your head an idea of where you're going to get out. Now, if you're a long-term trader, you want to buy something and hold it for a decade, you're definitely in the wrong place. That's not what I'm doing here. Here I'm creating a consistent, safe, predictable cash flow on a weekly basis. That's my idea. That's what I'm looking for. Okay, so AGNC is going to be a no. Sorry. Mimi, they have eye doctors to fix that. Yeah, Mimi, I'm well aware of that. Okay, I went to an eye doctor and he said, you know what, your best bet is to leave it alone until something happens to this one. That's exactly what he said. He said, keep it in reserve in case you lose sight in the right eye, then get the left eye fixed. He said, other than that, you've been functioning perfectly fine all this time. No sense of going into debt to take care of that scenario. So yeah, I get what you're saying, and yep, already took a look at it. Mikey G, Halliburton earnings on Tuesday the 22nd. Cool beans. No dividends for Hertz. I was the lucky one that bought it, looked at my account after hours, and sold. Well, I actually have some Hertz. Okay, so let's take a look at it. HTZ. Yeah. Well, that looks pretty damn good, don't it? Well, I'm going to have to check tomorrow morning what my account looks like for my Hertz. Alright, so that being said, let's take a look. Well, we see, I'm not going to count that high because that's going to be a no right from the beginning. And the reason why it's going to be a no, if you think you can go from 4 to 8 1/4 in 2 days and not have profit taking, yeah, I don't know what to tell you. Okay, think about it. If you're in the $4 area and this thing doubled in price from Thursday to Friday, if you don't take that profit, I don't know what to tell you. You could hold on to it and keep on riding it. That's always a possibility if that's what you want to do. Okay, I take the profit going to the next one because there's going to be another company that jumps. Okay, this does not happen often. Okay, don't set your sights on finding the next one to do this, because I've had Hertz for the past 2 or 3 months and it never done this. Well, it did this time. Okay, I'm not counting on it. Okay, let's go to the next. Hello, did you look at XDG? Chris, XDG, never heard of it. XDG. It's a no. Imagine that, Chris. HDG is a no. XDG. Okay. Hey John, makes perfect sense. Makes perfect sense. I do understand all of it. It just curious your reasoning. Curious of why I want to get 1% per week. Okay. Well, here's the thing, John. I'm retired. Okay. My income to pay my bills has to come from somewhere. Okay, so I got two choices. Invest the money myself or give it to someone else to do for me. Well, I'm not giving my money to anyone, so I'm learning to do it myself. I'm retired. And the money I have has to last me the rest of my life. Okay, which means I need income on a consistent basis. That's why I'm doing it myself. So that's my reasoning. Texas Boil Ballin'. How are you doing? ECL. What the heck is ECL, dude? It's a no is what it is. Texas Ballin'. Come on, you've been here before. You have a name like that. I'm not going to forget it. Okay? XCL. XCL. That's Ecolab. Okay? Monthly. 16 May, 20 June, 18 July, 19 September. Dude, those are months. You've been here before. You know I don't do monthly because the numbers just don't work. Big screen. Even if you're still getting 1.5 to 2% by rolling it. Okay, I'm keeping it, dude. If I can get 1% or 2%, 1.5%, I'm perfectly fine. I had it on the low threes, and it took my profits. Andrea, that's an awesome idea. James, I'd had hers for the last year, and it never did that. So I said sayonara and took my profits. Absolutely great idea. Secretary 173, dude, haven't heard from you in a while. For your information, I know tonight doesn't equal morning, but futures down again. Imagine that. Okay. Thank you, Secretariat. Okay. Max Capital. Good evening, James. Good to see you again. Thank you. Free speech. Okay, now free speech and other stuff, we already looked at Bank of America. Okay, the stock pricing just was not there. Okay, the motion, we're going to look at it again next week, and hopefully it will show up next week. Oh, check it out. 11:26, we got 4 more minutes to go. Let's see if we can take another one. Scotty's been waiting patiently to take a look at Riot, so let's take a look at Riot. RIOT, Riot, 646. Wait a minute, we looked at this one already. Okay, it found a new bottom on Thursday. Yeah, she's coming down. Yeah, we're going to wait to find a new turning point where she goes back up again. So we already looked at that one. No, not Riot. Oh, RIOC. ROIC. RIOC. What the heck is that? RIOC. ROIC. Okay. ROIC. Hell no. Come on, dude. You should know better than that. Okay, so Key looks okay for this week. Secretariat, let's take a look at it. KEY. Interesting. Okay, well, let's go backwards and take a gander at that. Okay, so here's Key Bank. This will be the last one for the evening. Here's our high. Here's our low. Here's where it was. Here's where it is. Look at this. Up, down. Up, down. Now it's going back up again. So let's take a gander at that. Okay, first, before we do, 1439. So the 1450s are going for 19, which is over 1%. That's what we're looking for. Key Bank, it is a company that I've heard of. It is on Warren Buffett's list. All right, well, that's going to be a yes. Well, let's take a gander. A year ago, 1466. Okay, we get a high at the end of November at $20. Okay, so she went from $20 high, dropped all the way down to 12, almost 50%. Let's call it 47% drop. Last 90 days. Okay, high, low. Where was it? Look at this. It's sideways down. Up, down, up. Well, it's definitely going up. It looks great on the 90-day chart. Okay, 90 days. Last 3 months. Well, I want to see what it's going to do next. Because this looks very familiar from the other positions we've looked at. So let's zoom in. Okay, up, down, up. Look at this. It's going up. But here's the bottom here 3 weeks ago. So 1, 2 weeks to the upside. Do we really think it can do week number 3? Can it do 3 weeks in a row going up? It could. Look where the high is, way up here. That's a lot of space up here. Okay, but where's the bottom? From 12 to 14, it's only $2. Okay, but $2 on a $12 stock is what, 1 no, is that 10? Probably 16%, 17%. Close. It's a nice move. Okay. So it looks good. What does it normally do? Normally this time of year, Key Bank looks something like this. Up, down, you know, no big moves. Okay, looks okay. But you got to ask yourself the question, does that look like something I want to get into? Well, it doesn't look that bad. There's a lot of space between now and there. And there was some profit taking last Wednesday. That could have been people bailing out, taking that profits, and the rest wanted to take that ride up. Don't know. Could be. Okay? So, that being said, it's 11:30. You guys have a great night, and we'll see you again tomorrow night, and we'll do this all over again. And for those of you guys in my morning trading group, I'll see you first thing in the morning. Now remember, I share 3 of my accounts, so you can see exactly what I am doing, and I can walk you through whatever questions you may have. That's the beauty of having somebody there to walk you through. Okay? Anyway, if you want to join, you know how to do that. See you in the morning. Other than that, you guys have a great day, and I will see you again tomorrow. Have a nice day, everyone. Done over here. Finish. Done over here. Bye, you guys. Done right here. Done right there. And done over here.